Give me one moment, guys.
All
We're
right.
starting on the phone, so
We're switching from our cameras to our phone. So we're just getting it fixed back up here so I can see the chat.
just bear with me because this is not. Our internet went down, and so I'm trying to fix it the best I can. Just bear with me.
All
Okay,
right.
hold on one second.
Well, let me just get the chat up so I can see what you're saying, and we will just restart again. There we go. All right. Now, can you hear me? Can you see me? Are we good? Just give me a thumbs up if we're finally able to hear and see me. Let's see. Yes or no? Checking it. Can you hear me? Are we good?
Hold on, let me see. Talk to me.
1, 2, 1, 2, 3. Anybody out there?
Yeah, very low. Hold on. I'll fix it in a minute, guys. Give me 1 second. Just bear with me.
This is not the right show. That's up on our screen, so I can't. That's why I'm not seeing the chat. That's why.
This is the chat right here. I'm sorry, guys. Bear with us. Had to switch a little bit.
All right. I just need you to get the right chat up for me. That's from this morning show. I need tonight's show. That's not the right show. Thank you. All right, you guys. Sorry about that. He's getting the chat so I can finally see what you're saying. Let's do this again. We are on week 8 of Ledger to Leadership. Y'all got to love tech issues. Just got to kind of roll with it, right? Thank you so much that you guys hung out with me. I appreciate it. We will not have the green screen since we're going on the phone, but we're going to make this work. We're just doing whatnot here. So you can see and hear me. All right. You'll just have to deal with the green tonight. We are talking about the profit and loss statement. Can you guys hear me okay? Give me a thumbs up if you can hear me. My husband's saying he can't hear me at all. Yes, they can hear me. Perfect. Okay. So, profit and loss statement. Let's just take a deep breath. We'll just count to 10, take a deep breath. This is the most important statement in your business. This is the week I get really excited about. In the full 12 weeks, this is one of my favorite because your profit and loss statement, first of all, it's the one piece of a financial statement that most people are familiar with. And not only is it the one that most people are familiar with, it's the one that almost gives you the most information that you can make actionable decisions for your business with. So it's like opening the secret door to the inner workings of your business by looking at one piece of paper. It is really pretty cool. This is where accounting gets really geeky and exciting all at the same time. So before we dive into it, I want to do a very short recap. Now, I normally would do this recap by using my iPad and writing on it and showing you. Since that's not available tonight, I'm going to write this out and I'm just going to hold up a piece of paper. We are just really going back old school. But some of the stuff we've been talking about, and I'm not doing the full recap, we're just going to do a little bit here. But we talk about our basic accounting equation, how assets equal liabilities plus equity. So let me show you that. Assets equal liabilities plus equity. That's our basic accounting equation. But then we also learned that underneath equity hides revenue and expenses. So down there underneath equity, you have revenue and expenses hiding. The profit and loss that we're talking about really digs in deep to that revenue and expenses. So that's really where we're going to spend our time, is looking at using this. So think about this. We learned this accounting equation in week 1, and then we learned about credits and debits and all the accounts that go underneath all of these. And now we're going to use this as the basis to form our first part of our financial statements. The second part of our financial statements, uses your accounting equation up here for your balance sheet. That's next week. But we're looking at revenue and expenses tonight. So we learned that credits, see if I can write upside down, probably really messy. Credits increase revenue and debits increase expenses. That's going to be important as we start to produce our profit and loss. We'll get there though. And underneath that, if you think about revenue, you have your revenue accounts depending on what you sell. For me, it would be like primitive decor. For our vintage, it'd be primitive decor, the fine and elegant, the warm embrace type of decor. I'm looking at my different categories of the type of vintage that I sell so that I can make decisions on each one of those categories. So that would be my revenue. You have your revenue streams, the different ways you have of earning money. Then I would look at my expenses, which we're all familiar with, the biggest being cost of goods sold. And then we start digging down deeper into our shipping and our telephone and our supplies, our software, all of our subscriptions, all of that good stuff. Well, now that we know what they are individually, our profit and loss is going to pull that all together in one easy to use report. Now, the key to this is to really understand. Let me go back in my notes here, is to really understand what we're looking at with the profit and loss. And then once we understand the makeup of it, we can then use it to make some really good decisions. So the profit and loss shows the flow of your money from the point that you make it from the revenue all the way down to your profit. So it's going to give you the most information. It also shows you where you're losing money, which could be just as important to know as when you're making money. You want to know where your big money makers are, but you also want to know where those holes are, where that's money leaking out. And this is the statement that you look at to figure all of that information out. A profit and loss covers a period. Um, can you guys not hear again? Are we good? We're good. Okay. Um, if you can't hear, you can't hear me give you instructions. But if you can't hear, swipe out and swipe back in. Um, a profit and loss covers a period of time. This is a really important piece of information to know about the profit and loss. When I say that it covers a period of time, it's going to cover all the money coming in and all the money going out for the period of time you designate: a week, a month, a quarter, or a year. Typically, we look at profit and loss on a monthly basis, a quarterly, and then at the end of the year. If you kind of think about your whatnot financial statement, if you go and look at your annual whatnot financial statement, that's kind of a modified profit and loss. It gives you some of the same information on an annual basis. I recommend for your business that you look at it at least once a month. And through this course and tonight, you're going to have all the tools to be able to create it and understand what you're looking at. So there are 5 key answers that your profit and loss, I'm going to shorten it to your P&L is how we would shorten that. 5 key answers are questions that are answered by looking at this one sheet of paper. The profit and loss is going to tell you how much did you sell. So all those different revenue categories, how much did you sell during your period of time? What did it cost me to sell that? What was my cost of goods? What money did I have to spend in order to earn that revenue? What was left before overhead? So after that money came in and I paid my cost of goods was taken out, how much do I have left before I have to start paying all my overhead expenses? And you may be sitting there thinking, I don't really have overhead. I don't own a warehouse. I don't have employees, but you do have shipping supplies and software subscriptions and miscellaneous office supplies that you need to buy. So you do have overhead. Maybe it just looks different than somebody else's overhead. The fourth question it's going to answer is, what did it cost to operate my business? Think about these questions. These are like the key things you need to know, right? What did it cost me to operate my business? So that's after your cost of goods. That's all those other things, all the shipping supplies, all of that stuff. And then finally, the fifth question this one piece of paper answers for you is, what did I actually keep? At the end of the day, what was my actual profit? Which is kind of what we all want to get to. Now, I'm teaching you how to create this on your own. Some of you may be using QuickBooks or Reseller Genie or another type of software, which is great because everything we talk about, that's what's happening in the background of that software. So now you understand what that software is doing. More than likely, I know QuickBooks does. I'm guessing that Reseller Genie will produce a profit and loss statement for you. So in that case, maybe you're not doing it yourself, but now you're going to have the tools to understand it and read it. One, know if it's done correctly, and then two, make some really good decisions. So far we've talked about we're looking at revenue and expenses. Yes, it does. Okay, great. Thank you. I wasn't sure since I've never been in it. I wasn't sure if Reseller Genie did or not. So we've talked about revenue and expenses, and we've talked that we're looking at a period of time. Okay. So now, when we look at our profit and loss statement, there are five, it answers five questions, and it's broken up into five key sections. Five pieces of key information are provided on your profit and loss. The first one is your revenue, all that money coming in. And then the second one is your cost of goods. This is what your inventory cost you. The third section or the third kind of piece of information on your profit and loss is your gross profit. So this is your revenue minus your cost of goods. And this tells you your gross profit tells you if your pricing and your sourcing is where it needs to be. Those are kind of two key things, right? What are two of the biggest questions all sellers have on Whatnot? How do I source? How do I source effectively? How do I price my items? Guess what? Your business information provides those answers for you. So, your profit and loss, your gross profit is going to give you insights into your pricing and your sourcing. The fourth part of your profit and loss statement is your operating expenses. This is everything else that we talked about: shipping, telephone, um, admin supplies, software subscriptions, all of the other expenses that you have in your business. Okay. And finally, the fifth part of your profit and loss is your net profit. This is what's left. This is this one here. Your net profit tells you, is this a sustainable business? Am I making money? And even if it's a if you're losing money and you're looking at your profit and loss every single month, you'll start to see trends. Well, hey, maybe I'm losing money, but guess what? I'm losing a little bit less and a little bit less and a little bit less. Now I can see the light at the end of the tunnel because I have my information in a way that I can read it. It tells you a story of what's going on in your business and lets you dig down deep and unlock all the secrets. Okay. So, what matters most when we're looking at our profit and loss statement? What matters the most to us as business owners? What we're looking for is what we call pressure points. Pressure points in your profit and loss, pressure points in your business. We're looking at your gross margin trends. So, that gross profit, I'm going to show you how to turn those into percentages. We're looking at what is that trending like? Am I spending too much on my cost of goods? Am I not spending enough? Is my gross profit about the same? Why do we care about gross profit? Because gross profit is what's left before we pay everything else. So we need to have a healthy gross profit in order to absorb all those other business expenses and still have something left at the end of the day. Another pressure point we look at is expense creep. And it's not like the creepy van guy and, the blacked out windows. We're not talking about that kind of creep. We're talking expense creep, where those expenses just creep up on you and get out of control. And all of a sudden, you're spending a fortune on something that you didn't even realize you were spending a fortune on. Because it's like this. Think about this in your own life. You go to the grocery store, you buy a few groceries, day or two goes by, you buy a few more groceries, and you do this throughout a month. Well, every time you go and buy groceries in your personal life, maybe it's 20, 40, 50 bucks, but it doesn't seem like a lot. Then at the end of the month, you start looking back at all those times you swiped your card for the groceries, and you're like, oh my goodness, I just spent $2,000 on groceries. Well, it sure didn't feel like it when we're only doing 20, 50, 100 bucks at a time. Your business is the same way. And your profit and loss is what's going to allow you to identify your expense creep, those expenses that have gotten out of hand and you didn't even realize it. Okay. Um, the other pressure point that we're looking at is categories that carry profit versus volume. So, what do I mean by this? Well, our profit and loss starts out with our revenue statement, right? So, we're going to be looking at We're going to have our revenue based on some logical order to us by category, by platform, however it is that we want to analyze our income. So if it's by category, we can start looking at the gross profit by category and say, okay, I'm selling a whole lot here. I'm busting my butt. I'm selling one thing after another, but my margin is really little. I'm not making much money. Or maybe there's a category that's like nice and easy and smooth, and it's creating a big margin for you. So, are we looking at which categories are carrying us profit wise, or which ones just volume and eating up our time? We can find out that. That's a pressure point by looking at our profit and loss. And then finally, the last pressure point we want to look at is net profit consistency. So we're looking at that very bottom line. If one month my net profit is at 20%, and the next month it's at 80%, and then I'm down to 5%, and I'm all over the board, something's wrong in my business. We wouldn't necessarily know that by doing our business day after day. But when we start looking at our net profit percentages and they're all over the place, that's not good for us because we've talked in previous weeks how we want a nice, smooth, even cash flow and predictable cash. Well, net profit, if it's all over the place, you're not getting that. So now we can start to say, this is a pressure point. Some months I don't make much, other months I make a whole lot. Let's figure out what's going on here. Okay. So we're going to look at that. We're going to go through some examples and we're going to identify, okay, this is what my profit and loss says. What is it telling me? So we're going to look at some of that here. All right, let's do this. If you have the book or the PDF, we're going to be on the example page. And if not, I'm going to hold it up to the screen for you so that you can see it. But the first one here is, and I'm just going to read it. There's not a lot of numbers. This is pretty simple to follow along without seeing it. Is let's pretend that you're a jewelry seller, or maybe you really are, but let's just pretend we're all jewelry sellers. And in 1 month time, our period of time for our profit and loss that we're going to talk about is 1 month. So that's a period of time that we've identified that we're going to track this, right? So we're a jewelry seller. In 1 month, we made $5,000. Yay, us. That's pretty good. Our cost of goods was $1,500, right? I got to get my calculator out. Oh, I can't. I'm using my phone. So our cost of goods was $1,500. That means that our gross margin, our gross net was $3,500, right? But our gross margin was 70%. That means that for every $100, we made $70. That's pretty good, right? That's telling me my cost of goods cost me 30%. So for every $100, I spent $30 on cost of goods, and I was left over with $70. So that's revenue of 5,000, cost of goods at 1,500. All right, so that looks pretty good for a jewelry seller. But now, let's say that you sell any type of decor, household decor, vintage decor, antiques, whatever it is, it doesn't matter. You sell decor. We're going to look at another example. Now, the month that you sell decor, you made $5,000 again. All right, so far my decor and my jewelry is looking pretty even, looking pretty good. But your cost of goods for decor was $3,000. Wow, that means my gross was only $2,000. Far less than the 3,500, right? That I made on jewelry. My gross margin at that point is only 40%. That means for every $100, I only got to keep 40 of them. Whereas before in jewelry, for every $100, I was keeping $70. So looking at your revenue and your cost of goods is going to really open up what you're looking at as far as gross margin. Because remember, your gross margin is what you have before you have to pay all those other expenses. Already, if this was me and I looked at these two, I would say, jewelry sounds like the better bet. Maybe I need to refocus my efforts on jewelry because I'm not making a whole lot on decor. Or I say, my decor cost of goods is a little too high. How do I lower my cost of goods on my decor so that my margins are in line with what I'm making for jewelry? So we are finally at the point where we're looking at numbers and we're deciphering them. We're understanding the story so that now we can make decisions that are actionable and affect our business. Okay. Same sales. We had vintage decor and jewelry, same sales at $5,000, very different outcomes. All right. So we're looking at what works and what doesn't work here. I want to make a really key point that there's only two ways to change your revenue, your bottom line, your net profit. When we're talking business, there's only two ways to have more money left at the end of the day. And your profit and loss is going to um, unlock all of those secrets so you know what to fix here. And those two ways are make more money, spend less money. Those are the only two ways that you're going to increase your bottom line. But we just said we have revenue, we have cost of goods, then we have all these expenses. So what do I do? Do I need to make more money? Do I need to reduce my expenses? This is the beauty of the profit and loss. It will direct you and tell you where you need to focus. So if I look at just that example that we just did of jewelry, both made $5,000, but jewelry and decor both made 5,000. Decor had 1,500 cost of goods. Jewelry had 3,000. I can instantly say, okay, if I want my gross margins to be the same, I can obviously I want to raise my decor up to the 70%. I have two options. I can sell more decor or I can source it cheaper. So now I know exactly how to fix the problem that I've now identified because I'm reading my profit and loss. We're going to do a few more examples. I'm going to show you what a profit and loss looks like. We're really going to decipher all of it. But let's go to the next example. This example talks about a high volume, low margin trap. Okay. It's going to use dollar starts as an example. And I almost didn't put this in this book because I'm a dollar start person and I fully believe that dollar starts work. However, it is a good example to illustrate the concept that we're talking about. So let's think about this. A seller runs constantly dollar starts. Okay. They are a dollar start person. That's all they do. All auctions start at $1. They're making sales, right? Stuff gets bid up, they're making sales. Their revenue can look very, very impressive. But there's a chance if they're not controlling their cost, that their gross profit is really, really thin. We're back to that decor example. I'm making money, but I'm spending so much to get my items that my gross margin is super little, right? And then if you have a very little gross margin, remember that's the money you have before all the other expenses. If anything happens in the other expenses, like a shipping or a platform fee spike up, guess what? That just eats up your margin. It's really easy to get into in a dollar start trap, right? So when you're looking at your P&L, you're looking at that your activity isn't equal the profitability. We're working, we're working, we're working, we see the money, but where's my margin? Where's that profit? Where am I at the end of the day? Volume without margin creates burnout. Okay, we've already talked about burnout. We've talked about activity doesn't always equal money in your bank, doesn't always equal net profit. So the way we see this very, very clearly is by looking at our profit and loss because we're looking at the revenue for a specific category, and then we're looking at our cost of goods for that very specific category and the rest of the expenses, and we can easily say, "Damn, I'm working my butt off, and my gross profit is zero or no, or next to null. This isn't working. Okay, I need to make a change." Let's look at another example. This is called expense blind spots. So let's say you're doing your business so far, everything's going great, but software, what you're paying for Canva, maybe they increase their prices. And then the next month, ChatGPT increases their prices. Thank you so much for your purchase. Um, and then maybe your storage facility where you're keeping all your extra inventory items increases their prices. All of a sudden, all of these little prices are increasing. Okay, you're making the same amount of money as you always did. You're running all them same shows. You're making all the same money. Your cost of goods is on point. Your gross profit is looking good. But now all the rest of those expenses are going haywire. Your net profit is shrinking. Now we're in a situation where it's not about the effort you're putting in. It's not about how much you're making, how many shows you're running, or how you're sourcing. You got that on point. Now we can see the problem is in the money that's going out, the expenses, the operating expenses. We can clearly see line by line, wait a minute, this expense is out of control. When I look at my software and my subscriptions compared to my prior months, before I was paying 20% and now I'm paying 40%. I need to focus in here. This is what I need to fix to increase my net profit. So this is the beauty and the power of a profit and loss statement, is that it directs you to exactly what you need to fix in your business to make more money. We always hear people come to Whatnot and they're like, well, how these are the questions. How do I get people to come to my shows? How do I get people to stay in my shows? How do I get people to bid more? That how do I get people to bid more is really how do I make more money? It's just another way to ask it. Yes, they need to bid, but you watching your records and understanding your profit and loss, it may be nothing at all to do with the bidding. You can have the bidding, it could be something else in your business completely aside from the activity that's happening in your show. This is the point that many sellers miss. I'm so excited for you guys to be here to be like, hey, wait a minute. It isn't always about what's happening on the screen in the show. It's all that expense creep, it's all those little holes. And this is how I'm going to figure out where those holes are and fix them so I have more money at the end of the day, because that's our ultimate goal, right? We want all the money. Okay. So we talked about there's only two ways to make more money. I increase my revenue or I decrease a certain type of expense. And my P&L is going to tell me where to do that at, okay? Where to start. So we're going to look at a profit and loss example here. I'm going to have to hold it up to the screen. If you're just joining, welcome in. We are using my phone tonight instead. That's why there's just a green screen behind me. We are having internet issues, so we just pulled out the phone, and this was we would move to plan B very quickly. So I am going to be holding stuff up to show you and trying to like read backwards here. All right. So I want you to take a look at this. This is in the book. This is an example of a profit and loss statement. So you can see it is broken up into those categories that we talked about. We said it's broken up into a few main parts. And forgive me, I'm trying to look at the screen behind me too, so I can see what's on this page here. It's broken down into revenue, cost of goods, your gross profit. So there's our first three categories we talked about. Then your expenses and your net profit. Well, I've gone in here and I've wrote a few numbers already just to make this move along a little bit faster as we talk about it. But you can see right here, my revenue is, what was that? $8,000. My revenue is $8,000. And then I have my cost of goods at 3,200. That means my cost of goods is 40%. I take my 3,200, I divide it by that 8,000, gives me 40% right there, right where my finger is. That means that for every $100 of revenue that I'm making, I spent $40 on my inventory to make that revenue. That's what that number's telling me right off the bat. Okay. Then we have our gross profit at 60%. So my gross profit is my revenue minus my cost of goods equals my gross profit. So when I look at that, I say, okay, I have 60% gross profit. You know what I feel like, you guys? I feel like that guy from that Tim Allen show who looked over the fence. Totally off topic, squirrel brain, sorry. Okay, so my gross profit is 60%. Remember, my gross profit is everything I have left before I've got to pay all the other bills in my business, before all my operating expenses down here. That means that for every $100, I'm keeping $60 to cover all the rest of the expense. That's not $60 profit. That's $60 gross profit before my expenses. So now we start paying all the rest of the bills throughout the month, right? We have platform fees at, I think that says 1,200. Platform fees at $1,200. We have shipping at 800, $800. And then we have supplies and software at $600, which gives us our net profit down here of, I can't read it backwards, $2,200. So what I want to point out with this, our net profit, we made $8,000. Okay, we did shows all month, we made $8,000. We took out our cost of goods. Now we have $60 for every 100 of that we made. We have 60% of that to pay the rest of our bills. We pay the rest of our bills and we get down here to this 2,200, I just forgot. Yeah, $2,200. $2,200 out of 8,000. Wow, that's not a whole lot, right? I did the math for you. That's 27%, 27.5% of our total sales. That means for every $100 that we sold on Whatnot, we get to keep $27.5. Let's just say $27 to make it easy. How do you guys feel about that? Do you feel $27 is enough money to keep for every 100 that you spend? Your net profit's 27%? I love discounts. It's like, huh, no way. I want some more. I need more than that. All right. So you can look at, and here's what I really want to point out on why this is so important. Yeah, everybody's like, nope. You can do a show and do all these shows, and you look at your whatnot report and it says $8,000, and you're feeling pretty darn good about yourself. You're like, man, I couldn't go to work at Walmart. I mean, I wouldn't make that much working at Walmart. This is great. I'm going to keep doing this. But until you pull it all together and look at it in an organized fashion, you don't realize that you're only making $27 for every 100. Okay. So that's kind of how we're looking at this profit and loss. Some of the numbers I put in here on profit and loss. So if I go back up here and I look at the platform fees, I don't know why oh, there we go. We got stuck there for a second. If I look at platform fees right here, I put a number out there on the side. So this says platform fees were $1,200. That's 47% of my total expenses. So down here on the side, right down here, I added up those expenses. My total expenses came to $2,600. All right. That $2,600 of my expenses was 37% of my revenue. So $2,600 divided by my $8,000 of revenue, wherever it is right here, means that I spent $37. Is that 37? No, 32. Sorry, I can't read my own writing. $32 for expenses. So let's break this down a bit. I started with 8,000 right here, trying to do this backwards. I started with 8,000. Okay. For every $100 that came in that I earned, $40 out of every 100, $40 went to my cost of goods, went to buy the inventory, okay, to make that 100. And then $32 went to pay all my other expenses. So let's do the math. 100 minus $40, we're down to $60. Now minus another $32, that's what gets us to that 27.5%, which is over here on net profit, right? So you really can start seeing, what do I need to change in here? So if we look at this, we're going to talk about some questions here, look using these numbers, all right? So if you want to take a screenshot, we can refer to it, or I'm just going to tell you about it. So now I have this profit and loss. I figured out the percentages, and my eyes are starting to get opened, and I'm like, wow, I'm spending a lot of money. I'm making what seems to be a lot, but I'm spending a lot, and I don't have a lot left over at the end of the day. Now, how do I figure out what I need to fix? What is it? What am I looking at now? Okay. So some of the questions we're going to ask ourselves: is my gross profit healthy? Well, let's go back. Our gross profit was 60%. Are you okay with paying $4 to make $10? Are you good with that? Would you go to Goodwill, buy something for $4 and then sell it for 10? Yes or no? We have a no. Would you want to sell it for more so we have a higher gross margin? How many times have you been in a vintage decor category and seen people selling stuff for $10? We have one yes. This profit and loss statement is exactly, it's telling you what happened, that they have bought something for $10 and spent or bought something for $4 and were able to sell it for 10. But at the end of the day, they only had $2.70 left. That may be okay if you're doing volume, if you have hundreds and thousands of $2.70 earnings. That's not okay if you're only selling 50 items. That's a lot of time spent. So the first question I'm asking myself, is my gross profit healthy? I am looking at my gross profit right here. Is that a healthy number? Is 60% a healthy number? So what do I do? If I say yes, okay, I don't need to look at my revenue or my cost of goods if I think that's healthy. If I don't think it's healthy, that's it. Aged like fine wine. I love that. We need to lower our cost of goods. We need to look at our sourcing. Now we've pinpointed a problem that we can fix. Okay, everything's fixable. Everything is fixable if you know where to look to find the problem. We've just found a problem. Okay, let's just say it was okay, and let's keep digging. Let's keep seeing what else we can find to fix in our business. Are expenses proportionate to sales? So now we're looking at our expenses over here. We said we had over here $2,600 total. So those three things up here added to $2,600. That is 32.5% of our revenue. Is expenses proportionate to our sales? Are we okay paying 32%, $32 for every 100 we make? So this is the same question that we asked ourselves with gross margin. Maybe we are. Maybe we're like, you know what? These are all fixed expenses and I can't change them. This is what it is. These numbers, I have no control. I can't fix that. So I'm not going to worry about it. I need to fix up here. But if we say, no, that's not good, what are we going to do now? We're going to look at each expense and we're going to say, platform fees are tied to my revenue. I can't change platform fees. I can't call up Whatnot and say, yeah, I don't like your 8%. I'm only going to pay you 6. So we don't have control. We, okay, can't change that number. Shipping, can I change what I'm spending on shipping? Maybe. Or shipping supplies? I probably could. If I'm doing reduced at $5, maybe for the time being, I need to reduce at 7 or reduced at 9. That would help that number down there, right? Lower my shipping. If we're looking at shipping supplies, maybe instead of buying all the fancy envelopes, I need to buy some plain white ones to reduce that number. Now I see where a problem is and I see where I can fix it to make more money. Okay. The next question we're going to ask is, where is the biggest percentage drop? I'm going after them pink envelopes. Sure am. Can I just retire? We're getting there. Just got to be patient. I love discounts. Just give me time. Um, so now we're looking at, where is the biggest percentage drop? And if I were to look at it, this is a harder question to answer. But if I were to look at this, I would say my biggest percentage drop would be, what did I write down here? Would be probably in my expenses. So I'm looking at my revenue and all these expenses. My biggest drop, I would want to focus in on my expenses. You would also, this is not a standalone, just do this one time thing. I'm only showing you one profit and loss. In the real world, in business, you're going to have this month, say this is January, and then, or let's just say what month, or April. So this is March, this is last month. You're also going to have January and February, and you're going to be looking at these numbers, comparing it month over month over month. You're going to be looking at my revenue. Am I increasing it? Am I staying the same? Because some of this you can't control, right? So the things that are outside of your control, you have to say, how much of it can I control? We've talked about revenue a ton of times. People think, well, I can't. I'm going to put this down to talk to you for a second. People are like, I can't control my revenue. I beg your pardon, you sure can. Then the next thing people will tell me is, I can't make people bid. I don't know how much they're going to bid. No, you don't. But you know what you do know? You, by looking at this, you can take that revenue and how many items you sold. Now you know approximately how much money you make per item. Guess what? Now that you know that, you can schedule your show. And if you know that you make $10 per item and you're going to sell 50 items in your show, you can plan on making $500. Right? You may be off a little bit, but you can sure as heck plan your revenue. It takes your work and your effort. If you need to consistently do 8,000, if we look at this, if we're looking at this profit and loss, yep, if you know your average, that's what you use to source. Exactly. If I know people buy things from me at $10 to $15, guess what? I better not be spending $10 to $15 to buy the things. I better be spending a lot less. If you look at all of this and you're like, okay, I can't fix cost of goods. I can't, the only thing I can fix is revenue. If you look at this and you pinpoint revenue, let's fix your revenue. Let's schedule some more shows. Let's sell some more stuff. That is totally in your control to change. Okay. Does the time of show make a difference? It can. I suggest that you figure out your space, your slot. You will eventually pick one day and time to start. If you're brand new, pick a day and time called an anchor show. Stay there consistently while you're building up your audience. Do not give up your anchor show for anything. Okay. Same day, same time, you're building. Now, while you're building and people can count on seeing you every Tuesday at 8 o'clock, start trying out different times. Start keeping the data on the different times. And then eventually you can say, you know what? I've been Tuesday at 8, I've been building my audience, but I found Wednesday at 1 in the afternoon to be my moneymaker. It's consistently time and time again. Then you start the slow move to change your anchor show to the Wednesday. So, yes, it can make a difference depending on you, your personality, what you're selling. If you're on the East Coast, the West Coast, it absolutely can. But it's not going to look the same for everybody. There isn't a magic day or time. There's a magic day and time for you. The sassy goat, the process for handmade for a profit and loss is 100% the same. You are going to look and pinpoint the exact same information on handmade as you would for any other category. Now, for handmade, your cost of goods, that's where it really looks different. And I'm for all of you in the handmade, now that tax season is over, I am pulling together some handmade education type courses on accounting. So watch for those. They are coming. I'm in the middle of kind of pulling through what I would address and talk about to make it really beneficial to you guys. All right, let's go on to the next question, okay? Because remember, this is for us to make decisions. We don't make a profit and loss just to make a profit and loss. We do it to make decisions. So let's start answering the next questions. Would improving sourcing help the most for my cost of goods? If I improve sourcing, does that help my cost of goods? Yeah, absolutely. Okay. Would adjusting pricing help more? So once I start pinpointing it, now I start saying, you know what? The other way to affect my revenue is to change my prices. I need to make more money. Maybe I'm going to up my prices. All right. If I want to up my prices, now let's go to the next question after that. If I increase my prices, will my sales stay the same? If I sell 100 items a show and I'm a $5 start person, if I increase that to $7 because I need to make more money, am I still going to sell 100 items per show? Maybe not. Maybe conservatively, I'd only sell 80 items. So now I do the math and I say 80 times 7, what does that get me? Versus 100 times 5, which one's better? Which should I go with? What about this? Novel idea here. Just hear me out. It's a little out there, a little crazy. If you're a $5 seller and you want to increase your revenue, what if you went to $3 instead of 5? I know. $3 is less than 5. But just like going to 7 will decrease the number of items you sold, going lower has a really good possibility of increasing the items you sold. Maybe if I do 100 items at $5 and I need to increase my revenue, what if I tried 120 items at $3? It might work, right? This is how you start to look at this number and you plan and you come up with options for your business, actionable items that change your business and change your profit, okay? And I'm not saying, oh, this is the right plan for you. I can't tell you. I'm giving you ideas. If I was looking at this P&L, these are the things that would go through my mind as let's pinpoint the problem. Now let's try to fix this problem. Does that depend on the amount of people in your show? I do not think so, Zen. You need 2 people to bid. That's it. I know a bunch of very profitable sellers that have 10 to 15 people in their shows. It does not always depend on the number of people in your show. All right, so let's keep going. We're going to keep talking about these. I don't cream city rollers. I would beg to differ with that. That decreasing only works if you have people. Now, if you consistently only have 3 or 4 people, that might not be the answer. But if you consistently have 10 to 15 people, which is very realistic for most whatnot shows, it very well could be the answer. Lower prices tend to incentivize people to bid. Now, is this the only solution? By no means. It is not the only solution. The thought process here is to create your P&L, identify your pressure point. Where is it here that's causing my business some pressure? Causing the pressure, causing that pain in my business. Now, where do I fix that? Is a 40% cost of goods okay with me? If it's no, I need to fix my cost of goods or raise my prices, make more revenue. I need to either make more money or lower my cost of goods. Again, the only way to change the net, the bottom, is to bring more in or reduce what's going out. Those are your only 2 options. So it boils it down to really simple. You find the problem and then you decide, am I going to bring more in or reduce what's going out? So if my cost of goods is the problem, I can bring more in on the revenue. How do I bring more in on the revenue? Raise prices, decrease prices, one or the other. They just depending on if you are depending on buyer behavior, or I reduce my cost of goods. I source better. One or the other. If my problem is down here in expenses, if I pinpoint, wait a minute, software expense has been going up and up and up and up and up, that's a problem. I reduce the expense. I go and look at all my software subscriptions and I figure out why it keeps going up. And I either cancel one or I say, you know what? I use these softwares. I can't reduce it. This is a non negotiable expense. It's going to be that. Okay. So I can't fix software, but I still need to make more money. So what else can I reduce? All right. Let's look at something else. I can't reduce whatnot fees. That leaves shipping. Okay. And these are just three categories of expenses. You are going to have many more categories. I would assume most, most resellers are going to have 8 to 12 types of expenses. All right. Here we go. You're going to hear a little echo till my husband fixes his phone there. Okay. I'm back. This is my first show, y'all. I've never done this before. My name's Tracy. I'm new to Whatnot, and I am going to me and my husband are going to have a fun night tonight. He's my production guy. I love him. He's doing his best. He's running around like crazy because our internet went out. Um, but okay, so we're talking about lowering expenses. All right, let's keep going. We're going to move on because I have to pick my child up pretty soon. I want to show you in your books, if you have the book or the PDF, you get these worksheets. So before we talk about the worksheet, let's recap. So we talked about understanding revenue and expenses. It's a period of time. Normally it's a month, a quarter, and then a year. You're going to look at it in those chunks. We want to look month after month after month because we want to identify trends. We want to know, is our revenue increasing? Is it decreasing? Because think about this. If you're not tracking this, if you're not doing a profit and loss statement and you make $7,500 one month and then 8,000 the next month and then maybe 5,000, then maybe 6,000, you're in your mind, you're looking back, you're like, I'm in the 6 to 8,000 range. I'm doing good. But that's revenue. What if your cost of goods stays at that same percentage? What if you're still paying 40% in cost of goods and none of those other expenses are changing? You're drastically hitting your bottom line in a negative way. So you need to really start to do this month over month to see those trends, to then identify those pain points and those pressure points and start asking yourself, okay, how do I figure it out? What do I change? Do I bring more in or reduce what's going out? One or the other. It's the only way to fix it. And by using that profit and loss is how you're going to figure that out. So in your book or in the PDFs, we have these worksheets. Feel free if you would like to take a screenshot to see this information. But what we've done is I have broken down step by step by step and given you a way to analyze your profit and loss. So the first section here is revenue. So you're going to put in, what are my total gross sales for the period? Are they up, down, or flat compared to the prior period? What's my primary category? What's my money maker? You want to identify, is it jewelry? Is it vintage decor? Is it t-shirts? Is it, whatever it is that you're selling? And how many shows did I do? This is huge. Because if you make 8,000 one month and then 6,000 the next, maybe it's because you didn't do enough shows. Maybe the problem isn't your P&L, maybe the problem's you. Sorry to say it. Maybe the problem's you canceling your shows and not doing your show. Maybe the problem is, okay, I went on vacation, I expected less income. Maybe it's, oh, I keep moving my show. I'm not talking about you. I love discounts. But maybe the problem is I keep moving my shows. Well, if you move a show, you lose your audience and you don't make that money. Maybe it's not about reducing your expenses. And the only way you're going to see those trends to understand that revenue is to really look at, no, I've consistently had 10 shows a month. I'm doing what I'm supposed to be doing. This is going to open your eyes to say, oh wait, my shows are a little all over the place. I go back to you control your revenue. Right? You are going to hear consistency, consistency, consistency. It means more than just showing up. It hits your bottom line. It affects your P&L. Okay. So that's why that is included on here on revenue. It's one of those pain points that you're looking at. You control it. Section 2 is your cost of goods. So I'll try to get this so you can see it. The cost of goods there, you're going to put your total cost of goods, your gross margin, you're going to figure that out. And then you're going to say, what are my high margin categories and what are my low margin categories? Where am I making money here? I, we go back to the example. Vintage decor and jewelry both made $5,000 in the month, but I spent 3,500 on my cost of goods for vintage decor and only 15 on jewelry. Which one's my high producing category? Obviously, jewelry. So you're going to write this in because that's a consideration when you start looking at what I need to change. Maybe you're sourcing jewelry totally okay, but you need to tighten up sourcing on vintage decor. This is why tracking it in a little bit more detail, not just saying, oh, here's all my money. Here's my money by buckets. Now, those buckets could be whatever works for your business. They're not going to look the same for me or for you. I do mine by type of vintage decor. I'm looking at my primitives versus my elegant type of decor versus other types of decor. When I was doing jewelry, I would look at jewelry independently. You may look at it by the type of category or maybe the platform. Maybe you're like, look, I just sell the same thing. I sell stickers across the board. I don't really need to know if the pink sticker makes more than the purple sticker. That's not useful to me. But I do need to know, do stickers sell better on Etsy versus selling on whatnot? So then maybe instead of categories, you have platforms. All right. Hopefully that makes sense. So you set up how you're tracking in the way that's going to produce the most useful information to you in your business, depending on what you sell. So that's the first two sections. Then the next section of this worksheet here, we're going to get into our gross profit check. So we're up here at the top, our gross profit check. We're going to look at what is our gross profit? What's our trend? Is it improving? Is it flat? Is it shrinking? That's going to help you identify if there's a problem in your gross profit. Does this support my effort level? Is 40% gross profit enough for the effort you're putting in? Is $60 for every 100 you, $60 earning for every 100 you sell enough? Okay. So is it supporting my effort? The next section here is operating expense review. I put some over here, I'm backwards, some like categories, common ones that a reseller would have. And then I put other to give you the idea of this is where I'm looking at my expenses. I'm really drilling down into all those expenses. Was it high this month? Was it just okay, medium, or did I spend less? Maybe if I had too many highs, I might need to ask myself why. Why are those expenses high? Maybe if they're too low, I'm like, if they're too low here, what would that indicate? It's going to stay that way, or maybe I missed a bill or two and it's going to hit me hard the next month. So now you're starting to talk about how this helps you with planning for future months. Okay. The next section. So this we're on what page 3 now. So if you got the book or the PDF, these are all available to you to rip out, copy, use over and over. Okay. The next section, net profit reality. Oh, here's our reality check. Here's our net profit. Here's what's left at the end of the day. What is our margin? Remember in our example, our P&L example, our net profit, our net margin was $27, 27.5%. That means for every $100 we sold at the end of the day, we got to keep 27. Almost everybody who answered that question said that's not enough. Well, you're going to see it here and you're going to see, can What does that say? Cash felt tight. Was that good or bad for you? Yes or no? Um, and then we also acknowledge that our profit, our net profit at the end of the day, does not mean the money in the bank. We talked a lot about this concept. Don't judge it by what you're pulling out of whatnot into your bank. That has nothing at all to do with your profit. We talked about this, I don't know, I think in week 5 or 6, and that's all on YouTube. Again, I forgot to say that, you guys. This is on YouTube if you want to rewatch it. So go back and watch. Oh, wait, sorry. This one's not on YouTube because of our technical difficulties. All the rest of them will be. I'll see if I can record this and throw one up there. Okay. So then the final section here is, I can't read that. Fix first priority. What are you going to fix? Now that you've diagnosed, you've broken down all these different sections of your P&L, what do you need to fix? So you can identify what you need to fix and you can write a plan. You bought a sheet so you can, oh, perfect. Okay, yeah. I'm sorry, you guys, if you have to buy something to watch us back. I hate to do that. There is a dollar item. It's in the auction. I wonder if I can switch that over. Let me put this, let me make sure you don't have to. I'm just saying if you want to. Let me throw this dollar item over into the, if I can make that. You'll get a sticker if you want. Actually, you know what? I'm going to change something just in case. Don't feel like you have to. It's just because it's not on YouTube. I'm changing the price of this one down to $1. So in case you want to rewatch it, you have a very inexpensive option to do so. You'll get a sticker in the mail. All right, and then I'll pin it. All right, again, no obligation, just if you want to. All right, so then you have your fixed first priority. So now you know you've broken this down into sections, you've done your P&L, and you know how to fix whatever's wrong. That's the end of it. Oh, my husband wants to talk.
So one of the things I can do, it's going to be very funny. I am still recording the show. I can put it up on YouTube, but what you're going to see
You're going to see all our back end crazy.
is the camera recording the phone. So it's going to be pretty hilarious.
We'll throw it on YouTube too. Just make it easy.
So you can just listen to it.
Yep. So the last page of every chapter is a CEO check-in. These are just questions to ask yourself. This is included as a way to be like, okay, I did a P&L, or I read this section, or I understand what we just did. Let's start thinking about stuff. And I'm going to read them to you just to give you some thoughts on what should you be thinking when you're looking at your profit and loss. So which profit and loss section deserves my attention right now? So when you're looking at your profit and loss statement, we're looking for those pressure points, those pain points. Which section? Remember, our sections are revenue, cost of goods, gross margin, expenses, and net profit. Which one of those sections needs your attention immediately? Okay, because we can't fix everything at once. We identify one pressure point, we fix it. Then we identify another pressure point. Do my margins support my energy level, my effort level? Is a 27.5% net profit enough for the effort and time that you are putting into this business? Is $27, you keeping $27 in your pocket out of every 100 you sell, enough? What I just see what Liz Likes joined. Hello, and thank you for joining. She says something really good. She says, I look at my net profit and then I figure out how much would I get paid if I went and worked at Walmart. So let's say Walmart would pay you $15 an hour. Let's relate that to your P&L. I look at my P&L, and let me go back here so you can actually look at some numbers so we can make this real. We're going to look at our sample P&L. We made $8,000 that month. Our revenue up here somewhere, $8,000. But at the end of the month, we had 22 after we paid all the bills. Okay. If I had $2,200, I would take that $2,200 and I would divide it by the number of hours I spent that month working on making that 8,000. Okay. I'm going to guess, let's just ballpark 10 hours a week. I can't use my phone. Can you do the math for me? What is $2,200 divided by 40? If you only spend 10 hours a week on whatnot to make that 8,000,
55.
That's $55 an hour. Are you all good with $55 an hour? So if you spent 10 hours a week and you made, did you divide it by 2,200?
2,200 divided by 50.
Okay. I'm good with $50 an hour. I would be okay with that. That'll do. What if you didn't work 10 hours? What if you put 40 hours a week into Whatnot? What if this was your full-time gig and you spent 40 hours a week? So that's 4, 8, 120, 160. What is 160 hours? 2,200 divided by 160 hours. What's that? What's that hourly rate?
36.
$36 an hour. That's still more than Walmart. Maybe I'm good with that. Maybe you're not. All right. It depends on you. It depends on your business. So now you can start using that mindset. So what Liz explains that she does is she says, okay, here's all the money I got at the end of the month. Here's my net profit. Here's how many hours I worked. Did I make more doing this than I would have if I went to Walmart and worked those same number of hours? Now, that's not the hard and fast rule. That's a way to look at it. And I love the visual of that. It really makes it real, right? It's taking these numbers and asking yourself, is this worth it? Is my time and effort worth it? Because here's the misconception. You're going to hear people everywhere say, oh, you better price that higher because you sourced it and you cleaned it and your time is valuable. Sorry, buddy, your time means nothing in this equation. Zero. You don't record your time. Handmade is different. That's coming at a later date. Handmade is a little bit different. But for those of us just flipping stuff, buying and selling, it doesn't mean anything. When your time matters is when you get to that net profit and you say, does that, thank you, does that support the effort I put in? Okay. It helps me keep going because even with a bad show that underperforms, I'm still making more than you will. Exactly. I love it. But the first time I heard you say that, I'm like, I just love that concept. It makes it real. It's an easy to understand way to look at your net profit. Okay. So the next question you may want to ask yourself when you're thinking through all of your numbers, where might volume be masking weak profitability? Where is the volume masking weak profitability? So, what are we talking about here? We're talking about where does one of your revenue categories look really great? Where does it look like maybe I'm making a lot of money, but once I look at my cost of goods and the other expenses, me selling a whole lot and busting my butt is not doing it for me. Where is that volume really masking something? Now, what's the problem with the volume? Is it because I'm not charging enough? Is it because my cost of goods is too high? So now we start digging in like, okay, maybe it's not the product. Maybe I could still sell a lot of this product, but I need to change something about the way I'm selling it. Okay. So that would be the next question. Don't let volume mask profitability for you. Don't let just because you're selling a lot of $3 items or $2 items, think, oh, but I just sold, 1,000 $2 items. That's 2,000 bucks. That's pretty darn good. I like $2,000. Put it in a profit and loss statement and see what you're actually making. Is it worth it at the end of the day? That volume, you may be able to say, you know what? And I'm going to relate to something very, very tangible here. Part of my focus this year for vintage decor and my own business, these are the same things I do in my business as a CPA. Okay. This is how I look at everything. Um, Part of my vintage decor over the last couple of years, I have sold a lot of what I call filler. Okay. There's bangers, there's good stuff in there. But if I have 100 items, there's a whole lot of items that here, it's an average crock. It's an average piece of decor. It's nice, but it's not a big money maker. I'm putting a lot of time and effort to clean this, to do, at the end of the day, to all of that effort and the time to wash it, to photograph it if I'm pre-listing, isn't making me, is my volume, even if it's not high volume, 100, is that volume masking profitability? I am now reducing the amount of items I sell, but increasing the quality of the items I sell. I rather sell these all day long than I would an average piece of decor. These make me more money. So I'm using these same concepts to dig into my P&L and say, let's sell less lower priced items. I'm still starting at $1, but I'm bringing a higher quality item, thus producing higher bids for a higher quality item than I would a $7. I would rather sell a $15 item than I would a $7 item. Well, in order to do that, I need to bring something that's at least worth the $15. So it means I change my sourcing and I change what I offer to change my P&L to have more money at the end of the day with less work. Okay? So that's a real life example of how this works when you're digging into it. Another question you might ask yourself, are my expenses aligned with growth or convenience? All right, here's where I'm going to pull the rug out on some of you, okay? Are your expenses aligned with growth or convenience? What do I mean by this? This is no different in your personal life with growth in a personal, let's just say growth and personal. I want savings to go on vacation. I want savings for my kids' college fund. I want savings for a first down payment on my first home. But it's 3 o'clock and I'm hungry and I didn't take the meat out and I don't want to cook dinner. So I'm gonna order Uber Eats. Convenience just overtook my growth in my personal life. Think about that in your business. Okay. Is the money you're spending supporting that goal of growth in your business or the goal of whatever you have financially in your business? Okay. So are my expenses aligned with my growth or are they just convenient expenses? What single adjustment could improve next month's P&L? Y'all, it's not about fixing everything at once. It's not about these major things like, okay, I'm only going to sell swung bases and then I'll be rich. It doesn't work that way. You identify one thing, piece by piece by piece. Business growth is slow. Business improvement is slow. Yes, some people shoot to the top really fast. That's not the norm. That's setting unrealistic expectations. Find one thing, find a one pain point, one pressure point, work on that, fix it, then find the next thing, work on that and fix it, and you will see improvement. So, what single adjustment could improve next month's P&L? So when I go back and I'm looking at that P&L, I'm looking at my numbers, what one thing on here could I change to make it better next month? Okay. Whatever better looks like for you, because it's going to look different to all of us. And that is the whole profit and loss chapter. That is our everything we are covering tonight. So if you have questions, feel free to throw them in now. I have about 15 minutes before I have to pick my kid up from cheer. So before I have to leave, so I can answer questions. We will put a very rough version of this on YouTube for you. So you'll be able to watch if you have any questions. And next week, this moves on to next week. We talked about the P&L. Remember the P&L, revenue and expense over a period of time. Next week, we are getting into the balance sheet. That's going to be your accounting equation. That is a point in time. That is just one day, one point in time, but they go together to form a complete set of financial statements for you. So that's next week. And with that, we're going to go rate somebody. And I want to let you know at any time if you have questions, I am always happy to try to help you. Just DM me. Don't feel weird. Don't feel like you're bothering me. I may not answer like immediately, but you are always, always, always welcome to DM me, and I will get back to you as fast as I can with any accounting question that you have or tax. And if I don't know the answer, I'll just tell you I don't know the answer and try to give you a resource that you can go to. So with that, y'all have a really good night. Thank you for being here and learning about accounting. We're going to go raid and we're going to go see Scuba Stevio. I think they're selling jewelry. So if you like jewelry, you're in for a treat tonight.
And stay pending for that YouTube. It's gonna be hilarious.
And we don't have a closing because we're on our phone. Bye, everybody.